Good morning. It's November 14th, 2025, and sunrise. Driving to Albany, New York. A couple of purposes for this trip. I'm thinking about relocating to Albany, and I'm going to check out some real estate, maybe some office space, and see if it's financially viable to do both. Kind of on the fence about home office. I feel like I have a hard time focusing at home. I think I would benefit from the office space, even though I'm paying to commute somewhere. But just for the value of getting out of the house and having a dedicated space to focusing on trading and my business, I think that would help. But couple of updates on the stock market and my trading account. From my last video, I ended up adding 10 more thousand to the account, so it was 60K, now it's a 70K account. Also, I took another profit draw of 3,000. So in my last video, I had taken 3,000. I've taken an additional 3,000. So I've taken 6K in profits, and my cost basis is now 64,000, and I've added 70K of capital in the account. So I put in 70K cash, I've taken 6K in profit, my cost basis is 64,000, and my net lick is a little below 70. I believe it's 68,000 and change, and that's just because the market has been going, it's had a few crashes. Small, I wouldn't even call them crashes. The market's had a few dips, which brought down my net liquidity value. So one big draw on my account is my holdings. So I went ahead and just switched strategies and got rid of a lot of my holdings. I got rid of the Goldman Sachs, GPIX, GPIQ, and the NEOS funds, SPY-I and QQQI. Not because I don't believe in them. I still have them in my other portfolio. I'm just not a fan of not using that capital to trade within this account. So the whole purpose of this account is to trade aggressively, and my other portfolio is more of a hands-off portfolio. So I'd rather own those covered call funds and that hands-off portfolio and dedicate this portfolio to trading more aggressively. That being said, I still have Ulti and BTCI and one other, and that's just because those shares are not profitable, and I think there's a chance they'll come back up, and then I'll sell them for a profit, get out of them completely, and reutilize that capital to trade. So I'm down to SPX Iron Condors and the wheel trade. So we'll start with the wheel trade. When the VIX went over 20, I went ahead and added a few positions. So I still had my one TQQQ put, but when VIX hit 20, I added one more. I added the 60 strike, really far out of the money, and I picked up about, I added the 60 strike, added TQQQ at about 45 days. Towards the end of the year, it's going to expire, and that was just basically, if I get assigned at 60, fantastic. That's a 40% discount from where it was when I sold my first put. And if I don't get assigned, then I just picked up some extra premium along the way. So no harm, no foul. Same thing with XOXL. I was short the 45 put, 35 put. 45's in the money. It expires today. We'll see if the price comes up and expires out of the money, or if I get assigned. I'm okay with either. That's the whole part of the wheel trade. And then I'm also short the 35 strike. Last night when I was looking, I believe XOXL was at 38. So might get assigned the 35 strike as well. That's all part of the process. I did it like that so that I would get a nice a blend in case the price did drop drastically. And if it doesn't, then that's fine too. I'll profit off the 35 put. I'll get assigned the 45, and then when The VIX hit 20 yesterday. I sold at 25. So I'm just, if I get a sign on everything, again, that's fine. I'm just dollar cost averaging down, which is all part of the process. Moving on to SPX. I was trading SPX towards the beginning of starting up the portfolio, then I stopped. Now I'm back in it. I started with short puts, and then recently I started with short puts again, and I decided, you know what, I'm gonna branch out a little bit, get out of my comfort zone. I'm gonna do an iron condor. So I'm doing a broken wing iron condor. I'm doing 10 deltas on both sides, but 50 point wide on the put spread, and then 25 point wide on the call spread. And this is to help me combat a rising market. There's a concept known as upward drift, meaning the market, if you look at a 100-year chart, it just pretty much goes up. So that's why it's skewed I have more exposure to the downside than the upside, so that I can take advantage of that upward skew. I had an additional 50 point wide put spread because VIX went over 20. So if you look at VIX, it's usually around the 15 mark in a normal market. And so anytime it spikes, it has a very strong chance of coming back down. And eventually it does. Even in a bear market, the VIX normalizes at a certain point. So say we start crashing 5% a month. When that initially happens, VIX might, and I'm just using example numbers, but VIX might spike to 35 when that happens. And then the next month is another 5%. But the bearish sentiment has kind of normalized in the market. Well, the VIX might settle down to like 25 or 20. And then the next month, it might go down a little, the VIX might go down a little bit more, even though the market is still going down 5% a month. So that being said, when VIX spikes, I take that as an opportunity to take advantage of it. History keeps repeating itself. VIX will eventually come back down to 15. The premium that I sold when VIX was 20 will be richer than the premium when it's 15, and hence why it's a profitable trade. So that's the trading wrap up and a little overview of what I got going on. Last update is I'm in the process of applying for a proprietary trading firm, and I'm not going to give out the name just yet, but essentially what it consists of is you pay a $7,000 membership fee, and that gets you in the door, it gets you the training, and then once you complete the training, you take an exam, you pass the exam, then you come up with a trading plan, you get your trading plan approved, and then you pay a $5,000 bond. Whatever you lose trading, they're going to deduct that from that 5K bond. If you deplete that 5K bond, they're going to send you back to training. So they have pretty lenient drawdown rules. It's 10%. So I'm thinking about utilizing the SPX Iron Condor for that prop firm trading, because they have a 10% drawback rule. Meaning, if I have a drawdown at 10% or more, then they're gonna send me back to square one. That being said, the Iron Condor handles bear markets, bull markets, especially the one I have set up now. It's set up to appreciate with a bull market, but also I'm not gonna get spanked so hard on the downside. So when the market was down 2%, I was actually making money off of it because the calls came in. I was able to roll the put out for a larger credit. When the VIX was spiked, VIX contracted, that put spread that I rolled out for was profitable. In the call spread, I was able to manage the calls, roll them down, and be profitable the entire time. So that's really going to help me with handling their drawdown requirement. Because in my personal account, I could take a 20% haircut. As long as I know what I'm doing and I believe in the process, I'm going to keep trucking forward and trading the strategy. But when you're trading someone else's money, you got to follow their rules. Their rule is a 10% drawdown is a no-go. So I got to come up with a strategy that fits that profile. And so I'm experimenting with it in my personal account, and I'm actually going to use that as evidence to get my trading plan approved, and then hopefully trade their money. And so they start you off with 25K, and if you're profitable 2 months in a row, then they'll double it. And they double it all the way up to 100K, and then after 100K, you have to meet with their higher ups, and they can potentially give you more trading capital. So initially, and I still think this, a lot of prop firms, in my opinion, are not legitimate businesses. A lot of them are ran out of like other countries. This one's ran in the United States. And also I met 2 other people that trade here. So they're real people and they're real traders. And so that gives me a little bit more confidence that I'm not getting scammed. But more to follow. I'm paying my 7K membership fee. Should be happening today, and then we'll go from there and see how things go. Checking out Glenville, New York. I like this area. It's a mix of residential and commercial, so you can get a nice little apartment down here, and then you got some food, little strip mall, and then you got office space. You got office space there. Weekend, so I'll have to call during the week. You even got a nice little steakhouse and tavern right there, built in. That's pretty nice. It looks like they got space to lease up above. More to follow. Even got a nice air museum right across the street. There's more aircraft on the other side. Take care and God bless.